Welcome back. Well, one of the big movers in trade is Medicure. It's buzzing today. Strong growth outlook in Q3 continued. The revenue jumped up by 25%. Margins as well held steady. We have with us Mr. Himanshu Baid, the Managing Director at Medicure. Hi, Mr. Baid. Good afternoon and good to see you win. Well, the street is applauding these set of numbers. They like it. Could you give us a sense about how do you see things panning out from here on in terms of the growth? What kind of growth number are you looking at, both for the domestic business as well as for the global business? And what about margins? How should they pan out for FY25 and 26?
Nigel, thank you. I think we have stuck to the target which you have set initially in the beginning of the year to get a growth rate of between 22 and 24%. So we are at close to that number, very close to those numbers. So I think if we see the whole year, a year as a whole, I think we should be in that range, same range, and margin improvement also around close to 100 to 150 pips compared to FY24. So I think there we are pretty much solid there. But I think going forward, I think what we want to do is, clock a growth rate of around close to 20% or a little bit over 20% for next 3 years. And that's the whole plan. The money which was raised through QIP will enable us to put in new manufacturing capabilities on capacities and invest in new technology. So for that, I think we are trying to, put that whole plan together. But internally, we think we can do 20% plus growth for next 2-3 years easily.
Indeed, because you've grown at 20% plus over the last 4 quarters as well. So you're expecting to sustain that. Talk about the product mix as well, Mr. Baid. Good afternoon. Thank you for joining in. How has the international and the domestic markets been this quarter? Because your mix is pretty even, right? 31% from India, 29% from Europe. The rest of the world comes to around 40 odd. How has the situation been both on ground here in India as well as overseas?
I think India, we are more bullish today because India, we have added around close to 65 people this year in sales and marketing. The plan was to add 100 people for the whole year, and we are on track to do that. So I think India still remains to be our most important market as we are bringing in a lot of import substitutes. And also, renal business has taken off very well. We had planned a 50% growth for the whole year, and we should end over 50% growth for that business. The new businesses, cardiology and critical care, are shaping up well. We have just received approval for the stents recently, just a few weeks ago. So we are going to launch that product soon. So India is, of course, we are more focused in India. Of course, Europe continues to be a big boost for us. We have a direct presence there through our subsidiary. And also we see, more products being added to the kitty as we receive our new certifications for regulatory approvals. So, and that continues to be the growth drivers to key markets. US will take some time as we are building the whole business there. So the real kick in revenue will start happening, let's say, by next year. It's only, not this year, but next year in year 26. But we have a pace which is not building up right now.
So does that mean that this 31% contribution that you have from the India business will go up to say 34, 35, maybe even 40 over the next 2 to 3 years, Mr. Baid?
I think not that number, but I think we should see it around 33 to 35% in next 3 to 4 years.
All right. Could you give us the absolute number? The Renal business, it's done around, I think, 35 crores for the past quarter. For the year, what should you end at? And for next year, since it's growing at such a fast clip of 50%, how do you see this number pan out?
So I think for the year, we are looking at growing to around 150 crores. That is what our target is. And on next year's number, I think, again, we are looking at a 50% growth from here.
225 crores or thereabouts, right?
Exactly. Yeah.
Mr. Baid, I want to ask you a question, which I've asked you the last few quarters, and every time I have you. You know which one? About the inorganic growth. What's going on there, Mr. Baid? Give us some timeline, give us some quantum. The street likes what you're delivering, but ye dil mange mo. They would like to see some more, aggression from your end, because as you said, the unorganized market is very large here in India, and there is plenty of potential as well. So by when could we see some kind of, announcement on this inorganic side of things?
See, basically, we are on a lookout for sure. Part of the QIP proceeds was, to be used for inorganic opportunity. So we are on a lookout. Mainly, we are focusing on technology side, that what we can bring in faster if we have to develop, build versus buy. So we are working on that. In India, in our core segments, I think we are pretty much out there. and we have a lot of product range which we are developing internally. And the story always ends at build versus buy. But when we go outside of India, I think there are a lot of new technologies available. So we are focusing there. So give us few more months, Nigel. Definitely will have some good news.
Which month? The first quarter of next fiscal year? That's the maximum
so.
because build versus buy, technological, outside India, I've heard it before. So should we be hearing about this inorganic acquisition? I think you've kept around 250 crores for this particular inorganic growth. So should we hear about it?
We have a bigger budget to buy. We have a bigger budget to buy.
How much bigger?
So we can also use internal cash in the company, which we also have internal cash around close to 300 crores. So we are not limiting ourselves to 250 crores. We have a bigger, let's say, kitty to buy, if we have to buy something. So we are not limiting ourselves here. So let's see how it pans out.
550 plus crores then, Mr. Baid, you're working with to look at that inorganic growth plans?
Yes, that's correct.
And would it be build versus buy? Which side are you veering towards, build or buy?
No, I think it has to be buy because, in our business, regulatory approvals take a long time. If we need to go to overseas markets. So I think it will be more prudent to buy versus a build story here.
And as you mentioned, you're on the lookout. Have you zeroed in on something?
Not yet. We are looking at 4-5 right now.
What about your expansion plans in the overseas market, Mr. Baid? You had mentioned earlier that you are planning on growing there in the direct presence, be it in the US as well. How much has the US become as a part of your business individually?
No, individual US this year will be between $2.5 to $3 million. It's not a big number. But as we have already said earlier, that we are trying to build it to around $15-20 million. I think we should hit that number by FY28 or so. And then meanwhile, we are adding some more product lines. So maybe we may see that number also increasing. But again, it depends on FDA approvals and the contracts we get into.
The recently concluded budget, did it have anything for your company?
Not really. I think what I see is more on the ease of doing business side. And I think that is very important. And I think that gives us a strong leg up, I would say, on the custom side, GST side, all that stuff. But typically for medical device industry, there was nothing.
All right, Mr. Baid, the stock is up close to around 10%. You're confident you'll grow at more than 20%. You believe there's scope for margins to improve by more than 100 basis points from here on. We wish you well. Continue doing the good work. Besides the stock price and financials, I think the country needs a lot of focus on medical equipment. So all the best on that front. And the next time around, hopefully something on the inorganic side we hear from you.